Good evening, ladies and gentlemen. Thank you for tuning in to another live. Today, it's unlocking your first home, understanding mortgage options for new buyers. So if you or anyone you know would be interested in content such as this, feel free and share the live. We're going to be on all major platforms tonight, like we are every night on twitch.com, LinkedIn, X, YouTube, Facebook, and Instagram, where we're going to be looking at the live chat. So I am your realtor, Hugo, licensed in Maryland with Long and Foster. Hugo Quintanilla is the full government. So I hope you all are having a great day. It truly is great to have you here for another live. So just to get the ball rolling, today we're going to be talking about mortgages and what it takes to get into the home buying process, because the mortgage is really the cornerstone of this whole procedure. It's the first thing that really sets the tone, and for many people it's the way that they purchase their first property. And as always, if you have any questions, comments, or concerns about buying a home in this market or any market, feel free, and as always, reach out on your platform of choice. So understanding the basics of a loan. Number one, first off, let's talk about what a mortgage actually is. Think of it as a loan specifically for buying a house. You'll pay it back over many years, usually 15 to 30, along with some interest. And the interest is what will vary. Now, what you've heard as of late is that interest rates are high. And they are higher than they have been because we've come off of a recent interest rate of about 2 to 3%. So people that purchased homes about maybe 3 to 4 years ago at this point, they are taking the benefit of having those lower interest rates. Before that, interest rates were still probably around the, 6, 7s, around there, maybe even a little higher. So it was around the 7s before this period of time, before lockdown. And then lockdown happened. They got all the way down to 2s and 3s. So from there, now it is gone back up to 6 and 7s. That's almost triple, double to triple what the payment would be for the same property last time. So a lot of people get hung up on that. Interest rates have been much higher in the past, but also the economic situation has been different. Prices weren't as high. Affordability wasn't as high. Jobs were also paying more in comparison to the cost of living. So there were a lot of other factors that maybe 10 to 15 years ago were occurring that made it more accessible for more people to buy homes. Whereas today, what you'll hear more than anything is how expensive it is due to interest rates and how much people are waiting for interest rates to go down to make it feasible to buy a home again. Now, it doesn't necessarily have to be 15 to 30 years. You can get other mortgages, but this is a general class, so that's just what we're going with for this one. Number two, types of mortgages. There are mainly two types: fixed rate and adjustable rate. A fixed rate mortgage keeps your interest rate the same through the life of the loan. An adjustable rate mortgage might start lower, but your rate can change, affecting your monthly payments. And that is what we want to avoid. We don't want changes in our monthly payments. We want to stay in a fixed payment as best we can. Now, maybe there might be more incentives of doing the adjustable rate. There might be some benefits when it comes to the actual loan. It could qualify some people that might not qualify otherwise. So that is truly the difference between a fixed rate and an adjustable rate. Who it can serve. So if it's the way that it works, you have to make sure that you are aware of this change and what's going to be happening, because the worst thing you can do is not be aware and then at the end of it all really expect something to be changed when you signed up for this. You signed up for this change when the moment you got this house. So be aware of the plan, know what to do when this happens, and know exactly what you're signing up for. It's a 15 to 30-year commitment. Know what you're signing up for. Number 3, government issued loans. There are special loans backed by the government meant to help more people become homeowners. We've got FHA loans, which are great if your credit isn't perfect, VA loans, super if you're a veteran, and USDA loans, which might fit you if you're looking at rural areas. Now, the FHA loans are government-backed loans. They can help with down payment assistance and closing cost help. They vary in what they could have to offer. So great options for anyone that has maybe lower income, maybe a little bit of a lower credit score, maybe less immediate funds, but still needs to purchase a home. Now, again, with any home purchase, make sure that you're buying within your budget and you're not overstepping your income. VA is a great option for veterans, and many of them use it to start to build portfolios for their retirement in their lives. So in their later years. So a VA benefit can be used multiple times. It just has to be used under certain circumstances, under certain terms. So as long as we stay within those parameters, there could be tons of benefit that could be drawn up from a VA loan. And then obviously USDA loans is more for a rural area where they will help you develop that area. Now, there needs to be under a certain restriction of population, income, your own requirements. These are all things that have to be approved before you get that type of loan. But again, another great option from the government. Number 4, conventional loans. These are not insured by the government and are a good fit if you are a strong credit score. They might require a higher down payment, but they offer flexibility in terms and conditions. This is the favorite loan of the majority of people, the conventional loan. Why? Because usually this is the type of buyer that wins the house. It's the type of buyer that has flexibility in their finances, has possibly maybe extra funds to give either for closing costs or security deposit, and possibly has more wiggle room when it comes to negotiating the terms of their offer. Remember, with an FHA loan, there needs to be certain requirements met by the government with inspections, whereas a conventional loan really only needs to be approved by the bank. And even at that point, if the buyer is well qualified enough, a lender may approve the property without that, appraisal. So that this loan in particular is one of the most popular for most people to purchase homes with. Second to cash right now. Number 5, down payments. Speaking of down payments, there's the upfront amount you pay when you buy the home. This can be anywhere from 3% to 20% of the home's price. The bigger your down payment, the less you have to borrow. And that is the key. Remember, we want to make sure that your payments work within your budget, that it's staying under your 30% of your income, and that it is within a workable range of what you already have going on so that you're not reaching. Now, if you put down 3%, obviously you're going to take out a longer loan, a bigger loan. If you put up 20%, you're only going to be taking out 80% of the price that you're going to be paying. So the more that you can put down in the front, obviously the less you will pay in the back in interest. And remember, interest, that's 6-7%. That's what's every month compounding on yourself, at least for the first 15 to 20 years. So you are strictly paying interest unless you advance your payments and pay a little bit extra every month. You are basically only breaking even somewhere around like the 22nd year, or anywhere between the 15th to 22nd year. So the majority, the front end, is interest. You want to pay down your interest as fast as possible. So we want to know where these payments are going to be. We want to know how much money we need to put down to make this work. So keep that in mind. Number 6, mortgage pre-approval. Before you start house hunting, get a pre-approval for a mortgage. It shows sellers you're serious and capable of buying the home. It also helps you understand exactly how much you can afford, and it takes the guesswork out of your paperwork. Remember, this is the type of confirmation that we get in the beginning that helps us to understand, hey, this is how much he has, this is how much they can go for, this is how much they're interested in, and this is what loan they're going to take. All that paperwork is done and submitted. They've already seen it. There's no guesswork there. When you're pre-qualified, they say, yeah, you can get a loan, but you still haven't submitted any paperwork. They haven't actually run a hard inquiry on your credit report. And without that, they can't guarantee at least initial pre-approval for a loan. So something to keep in mind when you are looking at the fine print of some of these brokerages or mortgage originators. Number 7, mortgage interest rates. Interest rates affect how much you'll pay in total for your home and can vary based on the economy and your credit score. Shop around and compare rates from different lenders to find the best deals. I will also say that you shouldn't let the interest rates determine whether or not you buy a home. You should let the monthly payment make that decision for you. Now, I say that because the important thing is getting into the game, getting into the industry. Once you're into the industry, the potential for you to grow that property, the appraisal, the appreciation for that property, the equity in that property will all grow. And these are all things that we want, that it's passive way of making income. So just holding on to it, paying off this monthly payment every year and taking care of the maintenance for this property, you can make tons of money from a home, but you got to get into it. And sometimes people wait for the perfect moment, wait for the perfect amount of money, wait for the perfect number, and it just doesn't come that easy. Sometimes you do have to just, bite the bullet and start before you're ready. And that will make the difference, because there are a lot of people that have been waiting on the sidelines, waiting for the perfect moment for a home that left the market 3-4 months ago because someone was willing to pay a little bit more for it. And now, let me again dial it back a little bit. A little bit more these last few months has been $10, $20, $30,000 sometimes. It's not always just a little bit more. So with a grain of salt, you have to take this information in these headlines, because area from area, it can vary widely. And on top of that, it can be a huge discrepancy on what over ask can be, because in any market, over ask could be $1 or it could be $10,000. You just never know. At number 8, additional costs. Don't forget there are other costs involved in getting a mortgage, like closing costs, taxes, and possibly private mortgage insurance if your down payment is less than 20%. This is why you hear this myth that, oh, I can only buy a home if I have 20% down. No, that's actually a bit of a myth. Let's be honest. It's a big myth. It's misinformation wrapped around a kernel of truth. The truth is that 20% down will make the loan less expensive, correct? Because you will not have to incur private mortgage insurance that basically covers the lender if you default on the loan. Now, after you get 20% of equity in the property, you can request and apply to get this removed. Some loan originators, will actually take it away from you after a certain amount of time or the equity is met. Or others will make you apply. So at any rate, once you have that 20%, be it at the beginning when you put the money down or at the 20-year mark when you've made enough payments on it, you can take that away. That will lower your payment, and that does make it a little bit more cost effective, but it's not much. We're talking about maybe, I don't know, it can vary, but we're talking about maybe $50 to $100, possibly a little bit more, but a month, obviously. But, again, working with a budget is the most important thing, because if we can make these numbers work with the 20%, then obviously let's put the 20% down, because that way we can make this an easier, more cost-effective purchase for you in the long run, because everyone can use a discount. Who couldn't use a discount? Number 9, government programs for first-time home buyers. Look into government programs designed to help first-time buyers. These can offer down payment assistance, tax credits, and more, helping make home ownership, more accessible. And more than anything, I think this is the avenue that a lot of our future politicians are going to be taking. A lot of government-backed programs to help incentivize buying and also incentivize selling. That's something a little bit new that we're seeing, is giving people an incentive to sell their properties, which could be another great way to, possibly bring more properties to the market. But it's a balancing act, because too many properties on the market will lower the overall supply. Well, the overall demand will lower, and then it could impact prices. So it's a fine line between, the right amount of supply and the right amount of demand. And right now, everyone can admit that there's very little supply compared to how much demand there is in the market. Number 10. Advice for choosing the right mortgage. Talk to a mortgage advisor. Compare different lenders and loan offers. Don't rush your decision. Choose the option that best fits your financial situation and long-term goals. That's why it's really important that you work with a lender that you trust, you can talk to, you can have an even keel conversation with, because this person's going to be handling your finances, and their conversations with you will impact the decisions that you will have to deal with the ramifications of for the next 15 to 20 years. Well, 15 to 30 years, to be honest. So choose someone that's trustworthy. Choose someone that knows what they're talking about. Look for people that have had good experiences with them and ask the questions, because different lenders will have different ways of explaining things, different ways of conveying information, and you want to get the best information to help you make the smartest decisions possible. And that's basically a wrap for today's topic. Remember, choosing the right mortgage is just as important as picking the perfect home. If you have any questions or need personal advice, as always, feel free to reach out. And if you're just joining us a little bit later on in the live, today we were talking about unlocking your first home, understanding mortgage options for new buyers, and what some of those things might mean. What type of loans are out there, and what type of fees you might see out there. So today, number 1 was understand the basics of a mortgage. Number 2 was type of mortgages. Number 3 was government issued loans. Number 4 was conventional loans. Number 5 was down payments. Number 6 was mortgage pre-approvals. Number 7 was mortgage interest rates. Number 8 was additional costs. Number 9 was government programs for first-time home buyers. Number 10 was advice for choosing the right mortgage. So, as always, ladies and gentlemen, it is my pleasure to hang out with you every evening and talk a little bit more about real estate and how it can impact you and those around you. There is a ton of new content on the social media sites, so go check out the bio site with all the new little details that we got. That's the site that I let you guys know about tomorrow. That one, bio.site/RealtorHugo. They'll have all my tools and all my links up there, so you'll have quick access to everything. And if you know anyone that needs help buying, selling, leasing, or investing in real estate, I'm always here to help. So feel free and reach out. My phone number is 240-389-4846. My email is hugo@lnf.com. My website is yourrealtorhugo.com. As always, ladies and gentlemen, thank you so much for tuning in. I will see you all tomorrow. Get some rest and have a great night. Tomorrow, what are we going to be talking about? Home inspections. What to expect. Dun, dun, dun. I'll see you guys tomorrow. Take care. Have a great night. Instagram, take care. I'll see you guys tomorrow.